Happy Friday. As the market opens up this morning, rates are up slightly from last week, but ultimately unchanged. 6.87 as opposed to last week, 6.85. And beneath the surface, it appears that we're seeing yet again another shift. Let's dive into it. This week, the Fed concluded their June meeting, and as expected, rates were left unchanged. However, what was interesting was around projections, specifically within the dot plot. We saw this back in March of 2025, and the expectation for 2025 were 3 additional rate cuts. Well, in this one, they're expecting 1. Message sent to the market that, hey, we're still concerned, we're being the Fed, about inflation. However, in that though, this week we saw more employment information, labor market information, specifically in jobless claims and continued claims, individuals not able to re-enter the workforce. Highest levels since 2021. As we know, the Fed's dual mandate, price stability, inflation, maximum employment, unemployment, and job security. We continue to see this ramp up in unemployment, continuing claims. The Fed will absolutely need to take action, and that action will likely be additional rate cuts. So more to focus in on that in the coming weeks and months, but something definitely that we need to pay very close attention to. This week, we also received housing data, specifically through new construction, housing starts and permits. And yes, we saw a decline in May. Now, this data was published for May, and builder confidence being down, permits are off, and there's a slowdown brewing, and rates may be the main culprit. As we know, affordability continues to be the leader of many clients making the decision to pause. That said, what we are seeing builders do is effectively deploy the buy down strategy, and you can do the same in your resale clients. So really the tip of the week this week is yet again maximization of the seller paid buy down strategy. Now, price cuts are becoming more consistent, more talked about, especially within the seller community. If you're running into a situation where a discussion around a price cut is on the table, please engage with us first. The power behind whether it be a temporary or permanent buy down, is a 2 to 3x return as opposed to the price cut. Meaning, if you were to cut by 50,000, it would correlate with the buy down to and savings in interest rate anywhere between 100 and 150,000 in comparison to the price versus the rate. So again, if you're running into scenarios where that is the focal point, whether it be on the buy side or the sell side, we would love to run individualized scenarios for you. As always, we're here. Let's make it a fantastic weekend and an even greater weekend. If you need help with any of these strategies, have questions, we're around. Do not hesitate to reach out. Let's make it a great one.